Have you ever wondered, what if one stock that's already considered a tech giant could still outperform the entire market over the next 5 years? Most investors are busy chasing Nvidia. Some are betting on AMD, but there's one company quietly powering the AI revolution behind the scenes. And by the end of this video, you'll know the 5 biggest reasons why Broadcom could become one of the strongest long-term investments through 2030. Trust me, reason number 5 might completely change how you look at this company. Let's get started. When most people hear Broadcom, they think it's just another semiconductor company. But that's only part of the story. Broadcom is much more than chip manufacturing. It builds networking hardware, custom AI accelerators, enterprise software, and critical infrastructure that keeps the world's largest data centers running. That means while companies compete to build AI models, Broadcom is selling the tools that make AI possible. That's a very powerful position. Reason number 1. The AI infrastructure boom is still in its early stages. Every major cloud company, including companies spending tens of billions every year, needs faster networking, more custom silicon, and better data center efficiency. That's exactly where Broadcom dominates. Instead of relying only on GPU sales, Broadcom earns revenue from the networking equipment that connects thousands of AI chips together. Without those connections, AI systems simply can't operate efficiently. As AI spending continues growing over the next decade, Broadcom is positioned to benefit from nearly every new data center that's built. Now here's something many investors overlook. Reason number 2, Broadcom isn't dependent on one single customer or one single product. Its business is incredibly diversified. It serves cloud companies, smartphones, broadband, enterprise software, storage, industrial markets, and networking. If one industry slows down, another can continue growing. That creates much more stability than companies depending on only one major product. But the next reason is where things get really interesting. Reason number 3. Broadcom has mastered the art of acquiring businesses. Many companies buy competitors and destroy shareholder value. Broadcom has done almost the opposite. Over the years, it has successfully integrated major acquisitions, cut unnecessary costs, improved profitability, and generated massive cash flow. Its acquisition of VMware expanded Broadcom far beyond semiconductors. Now the company earns recurring software revenue alongside hardware sales. That combination creates stronger long-term earnings. And recurring revenue is something investors absolutely love. But here's the twist. This next reason could be the biggest advantage of all. Reason number 4. Broadcom generates enormous free cash flow. Revenue is important. Profit is important. But cash flow is what gives companies real power. Broadcom uses billions of dollars every year to pay dividends, repurchase shares, reduce debt, and invest in future growth. That financial strength gives management flexibility, even during difficult economic periods. While weaker companies struggle, Broadcom can keep investing. That's one reason institutional investors continue holding the stock for years. Now we've reached the final reason, and in my opinion, this may become the biggest driver through 2030. Reason number 5. Custom AI chips. Most investors only focus on Nvidia GPUs, but several technology giants are designing their own AI processors. Broadcom helps many of these companies develop custom AI chips tailored specifically for their own data centers. If this trend accelerates, Broadcom could become one of the biggest winners regardless of which AI company dominates, whether AI demand benefits Nvidia or custom chips become more popular. Broadcom still has opportunities to grow. That's a position very few companies enjoy. So what about the stock price? Nobody knows the future with certainty, and no prediction is guaranteed. But based on continued AI investment, strong cash flow, growing software revenue, and leadership in networking, I personally believe Broadcom has the potential to outperform the broader market through 2030. If AI spending keeps accelerating, a share price significantly higher than today's levels is certainly possible over the long term. Of course, there will be volatility. There will be corrections, but long-term investors often see those moments as opportunities. Now, I want to hear from you. Do you think Broadcom can beat the market by 2030? Or is there another AI stock you believe has even more upside? Tell me your prediction in the comments. And if you enjoyed this video, please like, subscribe, and turn on notifications, because I'll keep bringing deep research on the biggest AI stocks before they make major moves. Thanks for watching. I'll see you in the next video.